Welcome back to my daily report market videos with me, Richard Perry, market analyst at Hantec on Tuesday, 18th of June. Looking at my final chart today, which is gold. Now, gold has been forming this run higher that tested the breakout on Friday. 1358 was the high, failed break, but then retreated on Monday, but then a rebound on Monday. It's been sort of fairly up and down in recent days, but it seems as though that the bulls are happy to support this at higher levels. It seems as though that the corrective moves do not last very long. Now, as we move into today, we're testing this 1348 level of resistance. This was the old high that we saw back in February and into June, which got broken out on Friday, but then failed the break. Now, if you see a closing breakout above 1348, I think that is a really important move. I think that is going to really help to drive the market higher. Now, however, I would say that the Federal Reserve is a big caveat on the horizon. Despite the fact that we've got positive technicals set up across momentum indicators, you do have a very slight prospect of a negative divergence on RSI and also stochastics, but for now I don't think we're sort of looking at that quite yet as being in place, because you'd need to see, say, for example, the RSI below 65 and stochastics well below 80, I think, to really suggest that that is a significant signal of note. But the Federal Reserve is a big caveat on the horizon, and if there's a hawkish surprise on the Fed, then I think you're likely to see this market coming back into maybe the 1324 area, maybe even 1310. But for now, obviously, the technicals are still pretty positively set up. You can see that through the hourly chart as well, where we've broken back above 1343 this morning. That's become a little bit of a pivot. That was a pivot on yesterday, resistance, and it's become supportive today. So 1343 is this level of initial support. You've got the momentum indicators, which are pulling more strongly as well. So yeah, it's all still set up fairly well positively in terms of the technicals, and little weakness is a chance to buy. But this breakout needs to happen above 1348 to really continue, and then reopen 1358, and then obviously you're into this big resistance overhead, sort of between 1348 and 1366 over the last couple of years anyway. And that is a massive overhead barrier, but certainly for now it's positively set up. And with that in mind, I wish you good luck in your trading today, and I will speak to you later.